Our next story is about American banks. They're known for their risk appetite. It caused them a lot of pain in the year 2008. That was during the financial crisis, 2008. A mountain of toxic loans came crashing down. It sent shockwaves across the global economy. The US government had to step in. They bailed out their banking industry. Earlier this year, US banks were in trouble again. We told you about what happened. There was a series of bank failures. Again, the impact was felt far and wide. And it seems American banks have not fully recovered from that. They remain a worried lot. They're holding on to massive amounts of cash. As of last month, they had over $3 trillion in reserves. So why are they stashing more cash? Well, this stockpile is like an insurance for them. Their economy is slowing down. Bank deposits are falling. In the month of May, for example, the US witnessed a record decline. There was an outflow of over $400 billion. $400 billion. Customers withdrew cash in very large numbers. This is the largest withdrawal since 1984. That's the year when record keeping began, 1984. Record keeping for bank deposits began that year. So this summer, we saw the biggest withdrawals ever. What's the reason behind this? The failure of US banks. Silicon Valley and Signature Bank. These were not the only two banks that failed this year, but we'll focus on these two because they caused the maximum damage. So why did these banks fail? Because they ran out of cash. The banks did not go bankrupt. There was a bank run. You see, any banking system runs on trust. In this case, there was a crisis of that trust or confidence. There were unprecedented withdrawals. Too many customers wanted to withdraw their money at the same time, so banks did not have that much ready cash. They had locked up their deposits in long-term investments, mostly in government bonds. Now, government bonds became very attractive, especially after the pandemic. The interest rates were high, so banks invested in them. They were hoping to fetch a higher return for their customers. A lot of money was put in these government bonds. In fact, this is the safest kind of investment. But in this case, the value of the government bonds had fallen. Banks could not unlock this money. And when people came asking for the cash, the banks did not have it. This is what led to their downfall. The other players in the banking sector took lessons from what happened. So now they're keeping more cash in hand. In case they face large withdrawals, they will not run out of money. At least that's the plan. But such moves are also telling. They help you understand the mind of American bankers, how they perceive their economic prospects. This move of hoarding cash is a reflection of the market sentiment, and it shows that there's uncertainty and caution in the US. I have one assessment from Moody's. This is a ratings agency, and Moody's predicts that there could be a recession in the US. In fact, I have a copy of their report. This is what they say. We continue to expect a mild recession in early 2024, and given the funding strains on the US banking sector, there will likely be a tightening of credit conditions and rising loan losses for US banks. What does that mean for banks? The situation will not improve in a hurry. More money could leave bank accounts, hence the need for a bigger cash pile. When people come asking for money, they should have that cash. They also face more risks, like the slump in the commercial real estate sector. Regional banks in America are particularly vulnerable to this. They lend a lot to builders. Do you know what's the total value of these loans? Over $3 trillion. And how good are these loans? Well, there is growing uncertainty now. Sales have taken a hit. In July, the volume of deals fell by 74%. It's the lowest level in 2 decades, 74% fall. Just 2 weeks ago, alarm bells started ringing. Debt worth $1.2 trillion is now at risk. They're being called troubled loans. Why? Because the loan values are high and prices of properties are falling. So there is a risk of default. Some landlords, in fact, are already facing trouble. The likes of Blackstone, Brookfield, and Goldman Sachs, they pumped money in commercial property, but their investment turned bad. This year, these 3 investors have either defaulted on their debt or relinquished offices to their lenders. US regulators are keeping a close watch. They're bringing new rules. They're urging banks to fortify their financial foundations. New regulations are in the pipeline. One of them requires banks to boost their liquidity, meaning keep more cash in hand. So while there is no storm at the moment, dark clouds still loom over the US banking industry.